Hello everyone, this is Dan Gramza and welcome to Gramza Market Studies for Monday, March 11th. Hope you had a great weekend. The NASDAQ market was not able to hold on to its gains. Let me show you what happened there. You can see the shadow on the high here, which from my point of view implies sellers at higher prices. But what are we looking for on Monday? A sideways move on Monday. This indice did not march at the same beat of the drum as we saw with the other indices. But that being said, I'm not looking for a dramatic move to the upside, but more of an unchanged type behavior. I feel the same thing here with the euro. This chart here means that the euro got weaker and that the US dollar got stronger, and I'm looking for a market to go unchanged for Monday. When it comes to the notes, this has been a beautiful market this past week. I think it's time to take a breath, and we're looking for that also for Monday. Geez, same thing here for gold. Gold, I was calling for from Friday, kind of a sideways type market. Well, you can see we broke lower and buyers came right back in. We're looking for more of that type of action. There has the potential as a market that wants to go higher, but it just doesn't have a reason to do it. When it comes to the crude oil market, we're seeing that getting a tad bit stronger. We also may be witnessing a disengagement to the US dollar. We'll have to watch that closely over the next few weeks. And when it comes to the grains, for Mr. Bean, I'm looking for a sideways move there. We can see that corn also firmed up on Friday. And again, this is just a reference to give you an idea that the magnitude of change between this red line and green line that you're seeing here is 6 cents. Each full penny, each 1 cent, is equal to $50. So that would be a $300 move. Also, over here in wheat, let's talk about that quickly. The difference here between that bearish level and this bullish level, or that red and green line, is also 12 cents in this case, and that'd be $600, be the magnitude of change. I'm not saying that in terms of that's what you should get or that you should be following these red or green lines, but I want to give you a feel for when you see a change in this chart, what does that reflect? Now, one of the things when it comes to the grains, if you're not familiar with them from a trading point of view, that's a full-size contract, those prices that I quoted you. Now, if you're trading a mini contract, it is 1/5 of that size. What does that mean? It gives you an opportunity if you wanted to trade grains, but you haven't traded them before and you're comfortable with doing so. It allows you an opportunity for smaller margin and smaller increments of profit or loss to expose your portfolio to these grain markets. So if you haven't traded them before and you're ready to start trading, you might want to look at those mini contracts. Also, let's just take a quick look at the VIX. We can see the S&P had a pretty strong week as it moved higher, and the VIX also came down this past week. My outlook for the week, this coming week for the VIX, would be a two-handle move at the most, which would be down to 10. So I think over the next month or so, if we still continue to see the same action in the S&P, for example, that we'd look for a sideways move between 12 and 10. Well, that concludes today's market studies. Thank you for being with me. Looking forward to being with you again, and in the meantime, take care.